Welcome back to the show this morning. I'm your host, Lance Roberts. If I have a two-headed coin and I flipped a coin, I said, Brent, I've got a two-headed coin. I'm telling you up front. I've got a double-headed coin. I'm going to flip this coin. You call the bet. Okay, what are you going to pick?
Heads.
So you're going to pick heads, right?
Yes.
Because it's a sure bet, right? Yeah. You're going to win.
You would think.
You would think. Well, the FAA has decided to approve Boeing 737 MAX to fly again.
Really?
Right? So remember, this was the whole big deal that started, we had the crash of the 737 MAX, and they shut down and grounded the airlines.
Software glitch, wasn't it?
The software glitch.
Yeah.
And they grounded the airplanes, and that was a big hit to Boeing. Well, the FAA has said, okay, we're now going to approve the 737 MAX to fly again. Nobody's flying. Heads, you win.
Everybody jump on board.
Heads, you win. Nobody's flying. We can approve the plane's completely safe. Nobody's flying. Nobody's going to crash, so it's good. All right, I'm being a little facetious.
Can't make this up.
Just this much facetious. Speaking of stuff you can't make up.
Yeah.
There was an article out in Investment News, and again, you've always got to be, it's interesting. We've talked about this before on the show. During periods of pandemics or shutdowns or economic stress or recession, these type of things, people start looking for opportunities to get rich quick. Right. And particularly in this type of market, in particular, since the financial shutdown, we've talked about, all these, people on Robinhood, day trading, bankrupt companies, et cetera. And everybody's making money hand over fist. Easy, right? Easy to make money. So it's easy to get sucked into situations where people promise you extraordinary returns and they can do all these great things for you. And it's always important to make sure you know who you're dealing with, ultimately, because a California man was part of a $35 million program. He was promising, extraordinary returns and these type of things. And, of course, he wasn't even a registered investment advisor, right? He wasn't even registered, but he just held himself out as a financial advisor. But the thing is that he was actually pretty innovative here, because apparently he was wanted by the FBI out in California. California man and the FBI on his part alleged a $35 million Ponzi scheme tried to outrun authorities on Monday by diving underwater using a small submersible device, according to federal regulators.
They'll never find me.
They'll never find me underwater. You have to come up to breathe sooner or later. They'll just wait for you.
That's a pretty snappy little piece that he used, though.
Yeah, it is. You can actually buy one of these online. It's the Yamaha 350 Li underwater sea scooter with a camera mount.
Ooh.
So you can actually film what you're doing underwater.
Yeah. You can film your escape.
Thanks for stealing my punchline.
Oh, I'm just trying to help.
You're really good at that. You steal my punchline a lot. But that's okay. But no, this is just, things where this is not the first time this has happened this year. We've had, there's the SEC's, caught a couple and investigators have caught a couple of different Ponzi schemes this year. The point, though, is, and again, this is just the second advisor in just recent months that have been on the lam while under investigation by the government authorities. And during times, like I said, when there's a lot of financial stress, people are looking for an opportunity to make some extra money or make money fast or get rich quick. I mean, man, everybody else is getting rich in the market. Why aren't I? Right? You hear these tales of glory, all over the internet. Be careful with that, because a lot of it's, A, one-off events, and two, a lot of it's not real. A lot of the stuff that you see on Facebook and on Twitter, believe it or not, it's not real. People standing in front of their Lamborghinis because they've been trading day trader stocks, not real. A lot of people tell you, oh, I made, it's always interesting if you ask people always tell you about their winners, right? Oh, I made, 50% in this or 100% in that. Richard Rosso was on the show the other day, just talking about how he just took some money. He took 10 grand and threw it. I forgot what stock he bought. He was talking about it on the show. Do you remember?
It was Neo, I believe.
Neo, that's right, the electric car company. He just threw 10 grand at it. No fundamental research, no matter nothing, right? Just threw money at it because everybody's talking about it. Stock went up like 60%. I threw money and I did kind of the same experiment for him with him after he did that. I was like, hey, that's a good idea. Let me try this just because I want to write a report about it. So I took a bunch of money and I threw it into Palantir, which is, this software stock that came out. It's up like 60% in a week. So, that's the type of stupidity that's going on in the market. I sold, by the way.
And let me ask for your insight on that. When you set your rule to sell, what was the sell point?
Oh, I didn't have a rule to sell on that one because I didn't know what it was going to do. So if I had a stop loss on it, I said, okay, whenever I buy something, I have a stop loss always set. But normally I have an upside target. Say if we get to a certain point, the fact is that, but it went like 50% in like 4 days.
Yeah.
So whatever stop there was, it was gone. But that was the point of the thing, is that I did no research on the company. I followed the same rules as Richard, did no research on the company, did nothing with it, just threw some money at a basically almost just picking letters out of a Scrabble bag. Almost that close. But that's what goes on in the markets, right? And that's not investing, right? That's just pure speculation. That's pure gambling. And I just happened to get lucky. So and so did Richard. But that's what sucks people into these things, right? You hear these stories. Now, what they don't tell you is about all the stuff they lost money on, right? So, you only get half the story. But people hear all these tales of glam and glory. And again, I'm going to write an article on this little experiment I'm running. But you hear these tales of glam and glory, and you see the pictures on Facebook and Instagram and whatever. And most of it is really just for their personal benefit, to sell a product, sell a service, sell a stock. And another thing too is be careful with these stocks that trade sub $5. A lot of these stocks that trade below $5 have very light volume. So here's the scam. I'm a newsletter writer, right? This happens a lot around the country. You'll get these newsletters in the mail. The scam is this: so I find a stock that may be trading at $1 or $2, right? Has no volume in it. So I buy some shares of the company. And then I put out a newsletter that says, hey, this stock's going to go to the moon. And so when you start buying in a liquid stock, the price moves up very quickly. Well, I'm selling my shares in the background, right? This is stuff that goes on all the time in the market. Market manipulation is part of the market, and this is why you've got to be so careful where you invest within the markets. And more importantly, when people tell you they're making extraordinary, outsized returns over time, always start asking questions, because generally you'll wind up with, look. In every business, right? It doesn't matter what business it is, there's crooked people, right? It's just part of the business, especially when there's money involved. And so, this stuff happens. We hear about the big cases, right? We hear about Alan Stanford here in Houston, Texas. We hear about Bernie Madoff, of course, $50 billion. We hear about these really big, Ponzi schemes that work, but there's a lot of these little ones, 10, 20, 30, $50 million that you don't really hear about. They don't hit the radar that often. They don't make big front page news, but these are very, very common. So, just be careful is my point. Make sure that you do a little background check, on who you're dealing with. Make sure you understand who you're dealing with. Make sure they've been around a while, right? I mean, I've been in this business for 35 years or almost 35 years. Let's not say it. How about 30? Let's just stay there for right now. There was an article out. There was a thing out yesterday talking about lamenting about the fact that because of COVID, we're shutting down bars at 10 o'clock at night, bars and restaurants.
Yeah.
I'm like, that doesn't affect me at all. At my age, I'm in bed by 10. I've already been to the bar. I'm back home. I'm in bed by 10. And apparently, COVID is only active after 10. So
who knew?
Who knew, right? Got to shut down bars and restaurants at 10 because COVID comes out.
And at church.
And at church.
Yeah, they don't want you going to church because of COVID, but man, you can protest out in the streets.
Exactly. COVID doesn't go to church. COVID protests.
Aha.
See?
Just saying.
See, I figured out if COVID doesn't come out till after 10 in bars, it's that girl in the red dress you don't want to bring home to mom. So,
or to anything else.
Exactly. Anyway, there you go. Anyway. But anyway, the point is, though, is just be careful here, particularly when you start getting pitched ideas that seem too good to be true. Generally, when things are too good to be true, they generally are over time. If there's a lot of I get pitched deals all the time where, this is going to give you a 20% rate of return over time or a 25% rate of return over time. It sounds great, but there is risk in any investment that you make that is providing an outsized rate of return, because the reason it's providing an outsized rate of return isn't because they just love you. It is because there's a tremendous amount of risk. And most importantly, if you do private investing, right, make private investments, read the prospectus that you're given. You have to sign off in private investments as an accredited investor. You have to agree that you understand there's a tremendous amount of risk. And buried within those documents are all kinds of statements about the risk of loss. So make sure you understand, again, this is talking about zombie companies earlier in the show. Make sure you know what you own, because that's what comes back to get you. But more importantly, make sure you know who you're investing with. Be right back after the break.
So if you want me off your back, well, come on and let me know. Should I stay or should I go? Should I stay?
Listen anyplace, anytime at realinvestmentadvice.com.
Long-term care is the financial elephant in the room. The median national cost of a private room in a nursing home? $8,517 a month. Are your finances prepared to handle that burden? Our next Candid Coffee with Richard Rosso and Danny Ratliff can show you how to protect your finances from the effects of a long-term care event, the myths to ignore, and how to prepare a plan to address the cost. Register for the special long-term care edition of Candid Coffee, Saturday, December 5th at riaadvisors.com.
Got questions for Lance later? Ask now at realinvestmentadvice.com.